What's up, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is October 13th, 2021. Please go ahead, click the like button on this video, subscribe to my channel if you enjoy this content. Today, we are going to talk about the price action in the indices. We're going to talk about this crazy shakeout we had in the morning and how the market resolved to the upside. I'm going to go through about over this past month of choppy price action, some things I did well, some things I did not do so well, and how I'm going to improve on those into year end. Super important to just always be objective about your own trading, your own analysis, your own performance, and always just look to improve that. And sometimes it helps to see someone else's mistakes, firsthand. That way it can help you improve your game. So with that being said, before we jump into the rest of this video, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades or anyone's trades for that matter. So box scores for today, we had the S&P 500 as measured by the SPY closing up 0.36%. We had the Nasdaq QQQ finishing up 0.8%. We had the IWM small caps finishing up 0.47%. And then in last place, we had the Dow Jones finishing up 0.03%. In terms of market volatility, look at how this volatility got absolutely demolished, team, for all these indices. So what's really interesting about what's going on into options expiration is these indices, they're not making all that much progress to the upside, but the volatility is really coming out of the options market. And market breadth, we had positive breadth in the S&P 500, Nasdaq, even the small caps. It says negative here, but we had 50% advancers. And then in the Dow Jones, we had 53% advancers. So breadth definitely looking pretty solid. Finviz heat map, let's check it out. So we had some advancers over here. So we had Amazon up 1.14%, getting some relief. We had Google positive, Microsoft, Facebook, all these names, everyone except Apple. Apple had some bad news in terms of their chip manufacturing. So this one was showing a bit of relative weakness today. But yeah, overall, the growth names really had a comeback today. And this morning we had our inflation data that came out at 8:30 a.m. And basically that data showed inflation moved basically in line. It was maybe like 0.1% higher than what was expected, but by and large an inline inflation print. Everyone has been super worried about inflation and the Fed potentially having to move a bit earlier than expected. And the market digested this inflation report very well. As we look at the sectors here, solar energy stocks were up another 2.52%. That group is now in our top momentum slot. We had energy finishing just down 0.09%. K-Web, I'm currently overweight the Chinese stocks via some leaps in K-Web, up 3.6%. Gold miners had a really positive day as well. And then some laggards. We had cannabis stocks lagging. We had financials lagging. Oddly enough, we had transports and some of those cyclicals that the market has been rotating into. Today was more so about growth getting a catch-up day. What was interesting about the price action today was in the morning, JP Morgan reported earnings. And JP Morgan, for whatever reason, the market did not like the earnings results. Let's take a look at what happened. JP Morgan down 2.64%. So in the morning, I'm looking at the markets. See, okay, the market was, pretty weak yesterday on the close. We closed below the monthly value area. All right, we got our inflation report out. Number was above expectations. So those inflationary stocks have to lead the market. Then when I saw that JP Morgan whiffed on their earnings report, I was like, oh God, now the inflationary assets are not going to do well because JP Morgan whiffed. Inflation came out high, so the growth stocks, might be under pressure. So today looked like a very ambiguous session. And sure enough, in the very beginning of trading, we did sell off. So take a look at the S&P 500. So this is, you can see in the morning, trading lower, and then throughout the session we really just got our second wind and the market bounced off of the lows. So we ended up with a nice performance for the S&P 500. And let's pull up our hourly chart. Make it a little bit easier here. So yeah, we were kind of stuck in no man's land today. And it was like, all right, we're going to slip into the abyss. At 10 o'clock, look at this long wick on this candle. So it looked like we were about to lose support and tumble all the way down to this 42.90 level. But dip buyers came in and supported the market. And then we had a nice constructive rally throughout the rest of the session. Keep in mind, we rallied to this weekly point of control. So it's not like, we're out of the woods. We pushed through the consolidation point or anything like that. But we rotated well off the lows of the day. In the morning, we got this big flush. And it was like, oh my gosh, small caps are flushing. Dow Jones is flushing. All these different indices. And yeah, those buyers really brought the market back to life. So check this out. We have, my proprietary trend signal is now at a +1 rather than a -1. So that's telling me I need to be more constructive on this market. We're still trading inside of this chop zone. So it doesn't mean, go all in, go crazy. But yeah, my market signal is now positive. So that's an incremental improvement. Look at the candle that we put in today. Nice green candle. We're trading right at the top of this chop zone. So it's not like, oh my gosh, we had a crazy breakout today. But we had every reason to just completely tumble into the abyss, and we did not. So that really says something about the direction this market wants to take. Check this out as well. We had abnormally high volume today. Not the highest volume ever, but we had more volume today than we did on any of these prior 3 red candles. So it really just shows, again, these dip buyers coming in hot and saving the market. Let's take a look at the Nasdaq. Nasdaq was our strongest of the indices today. Does the Nasdaq look, fantastic? No. It still looks the weakest out of all the indices, but now we're above the 5-day EMA on the Nasdaq, which is pretty solid, and it's starting to look like even on the Nasdaq, we just formed our first lower high, or a higher low, excuse me. As you can see, we made this low over here around like 14,367, and here we are making another low all the way up at 14,500 and change. So yeah, a much better picture today. And again, we had every reason to slip into the abyss, and we did not. Russell 2000 today also. This was at one point down almost 0.7%. Looked like things were going to get ugly, and these dip buyers really came in and just bought it all up. So look at this candle. We careened below this weekly point of control, and look at this big green candle that we ended up putting in. So yeah, nice action in the Russell. And then let's take a look at the Dow Jones. Dow Jones was the weakest today. It's primarily just because JP Morgan, whiffed on its earnings report, was only up 0.09%, but we did close right up on that 20-day simple moving average. We'll have to see if the Dow Jones can reclaim that 20-day during tomorrow's session. And we can see in the after hours, looks like it's making the attempt to do that. Let's take a look at our style factors. So on our style factor map, you can see we had quality stocks and international momentum of 0.74% and 0.91%. We also had growth up 0.72%, min-vol, defensives. So all these assets that should be going down while the market's worried about inflation, they're all ripping to the upside. So it's telling me, hey, maybe the market is looking through the inflationary pressures. Maybe the market is predicting, slower growth moving forward. But yeah, the price action that we're seeing is not aligning with these popular narratives that are out there. Worst performer on the day was actually high beta, down 0.05%. So I'll show you some of these names that are making some really nice moves to the upside. Net. So this is Cloudflare. This traded up 5.62% today. Look at all these consecutive green candles since the bottom. And this stock now trades at, what is this at? It's trading at 92 times sales. So if the market was really concerned about, oh my gosh, rates are ripping to the upside, inflation's coming, we're gonna have to hike rates, we wouldn't see Cloudflare just ripping to a 92 times sales multiple. Same thing like if we look at Datadog, really nice breakout. DigitalOcean, this is the name that I'm currently long in my trading account as well as my long-term account. This one, really nice breakout. Let's see even GLBE. This one has been a laggard. Yeah, GLBE not really even catching a break. Yeah, a lot of these names like Upstart, really nice action, trading to highs. Let's see what Asana did. Yeah, Asana looking good as well. So yeah, a lot of these growth stocks, really just moving to the upside. Let's just check out the IWO. It's the Russell 2000 growth. Yeah, it looks great. So yeah, if we're following the price action alone, forget the narratives. The growth stocks, they're breaking out to new highs. So that's not a bearish thing. Let's take a look as well at the VIX. Yeah, the VIX is trading down to 18.64. So yeah, the volatility is coming out of the market. That's not a bearish thing either. But let's take a look at some of my trades for today. And you'll see, this shakeout in the morning was violent. I did stop out of some positions this morning. So right off the open, Roblox. I actually took this trade. I took some January 21st, 2022 70 strike calls for $9.05. This was definitely my best trade for the day. Yeah, take a look at Roblox. So this is one, I outline this every weekend for Pristine Capital members. I send out a weekend watch list, send them a weekend watch list video, and I usually send them about like 10 setups just like this, where I include, trigger level, stop loss, target, reward to risk ratio, etc. And I basically outline my thoughts for the trade. This one triggered right on the open, and I took Roblox for a long swing trade. And this was a perfect undercut reversal trigger. So the undercut reversal, we can see this long lower wick from July 27th. The market undercut that key level. A lot of times when we undercut the key levels, a bunch of players go, all right, now it's time to take this thing short. Then if we get the reversal and we reclaim that prior low, it can set up for a really nice entry point. That's exactly what it did today. So I did take Roblox for a long position. That was a nice winner. Let's take a look. And I still have that position on the books. I closed out Facebook for a nice little base hit. Yesterday I talked about this, even on our Twitter spaces. Hey, I'm going to get long Facebook just for a little bounce trade. And I made sure to not overstay my welcome in Facebook. Yeah, Facebook didn't even really close strong, but I was able to exit this one for a nice little winner. But then also at around 10 o'clock, I did stop out of a couple positions because, I've been more optimistic on this market. Even though we've been chopping around, I think there's a lot of reasons why we could continue higher. But this morning's shakeout was pretty brutal. Soon after the market opened, we just ripped to the downside. And I was like, you know what? Market looks, horrible right now. I want to respect this price action. So you can see at 9:30 we opened up and then just, really traded lower. This is Facebook in particular. But let's look at, we'll take a look at the S&P 500. So right here, 9:30 to 10. Just ripped lower very quickly, very abruptly. And that was what shook me out of a few positions. And, going back to, some things I did well, some things I did not do well. My trend model was at a -1 heading into the session. And I think I had a little bit too much exposure on heading in. Where when this market dropped like this, I basically was like, you know what, I have to remove some risk from my portfolio because, what happens if the market really, takes that next leg lower. So I ended up stopping out of, I had some Dow Jones calls for November 19th, closed those out for 438, I'd paid 865, and then this IWM call spread. This one I pretty much knew was not going to expire in the money. Talked about this one maybe 2 days ago, and I was saying, hey, my digital turbine trade is about a 100% winner, but it's really just about to be canceled out by this IWM call spread. That's essentially going to be a max loser. So I closed this out for 27 cents. I had paid 288. And with this IWM trade, I still have small cap exposure on. I have more trades in this area. But I think what I could have done better is I could have given myself more time on this. With these small caps, the seasonality really begins to improve in November. And look at this, we've just been chopping back and forth into options expiration. Last week when I saw that original inflation print come out hot, and we got this, I believe it was this sell-off right here. That should have been a clue, hey, maybe lighten up on this, take it off, roll it out in time, etc. So I was kind of forced to close this thing out pretty darn near the lows today. So that's something where, moving forward when I'm in a choppy environment like that, I want to make sure to just give myself a little bit more time on those call spreads. If I think the asset's, going to flip to the upside, because you never really know how long you can just chop sideways. And especially when options expiration is approaching, there's just better ways to do that trade. So let's see, that is IWM, that's my call spread. And then I closed that ERJ for a scratch. I had some January 21st, 2022 calls. I closed out LVS for a small winner here. I had paid 245, closed out for 277. Pretty much right near the lows. At 10.19, I got long some SPY October 15th, 434 puts. And, I saw this violent shakeout again. I was like, you know what? I have long exposure on. I need to buy some sort of hedge because the market really looks like it's careening into the abyss. And pretty much that was right around the low of the day, I'll be perfectly honest. So it was 10.19. Where the heck was this? And it was like immediately after I put it on, the market just reversed higher. So where was this? Over here. So yeah, 10.15. No, 10.10, 10.15. Yeah, right around here. I basically waited till we got a bounce. And I was like, you know what? I'm going to put my puts on into this bounce because the market just looks so weak. And the market ended up just starting to trend higher and really regained its footing. So this one, I will say the good thing that I did was I wasn't stubborn and I closed the position out within 30 minutes. But it was, within 30 minutes, these short-term puts lost, almost $1 in value. I paid $372 for these, closed them out for $297. And this was where I realized, hey, this was a crazy shakeout. I've been pretty bullish and I just got shaken out of some positions. So that likely means, this was the final tree shake. So I put, we had every reason to slip into the abyss and we did not. This may have been the final shake of the tree. Because one thing I try to do is so I know how I'm positioned. I know what my views are. I know what my process is. I'm like, if I just got shaken out on that when we reversed to the upside, there were probably a lot of other players, that got shaken out as well. That's like a high quality shakeout. So from there, I was like, okay, this thing's probably going to rip. And sure enough, we just ripped to the upside. So all in all, now that it looks like, hey, this choppy period, this might be coming to an end. And I think we're getting to the resolution here. The market looks like it's in a better spot to finally rotate to the upside. In terms of this down sequence, in the beginning of the down sequence, I was very, very patient. And, for these 2 weeks, I really was trading puts. I was doing a good job of just staying out of the way of the market. Once we got down here, around down here, I ended up, adding some long exposure. And I didn't really expect that we were going to just continue to chop around, for weeks and weeks more. So I think, what I could have done is really just, with my market signal being flipping around from like a -1 to a +1 almost every single day, rather than placing those really bullish trades, would have been a better idea to go with some more neutral trades or even just trade a little bit less, to be perfectly honest. So one thing that I talk about for next year is in September, take a vacation. Also in February into March, take a vacation. Because, it's never a good feeling when, you have a really good sequence, all throughout here, and then you start giving back, some profits while you're just chopping around. So overall, I would say, was this sequence, was it horrible? No, not horrible, but could this have been a lot better? Yeah, this could have been a lot better. If I had stuck with my trend model, through and through, this would have been a much smoother sequence. But in order to combat that, I actually coded in my trend model right into my think script. So that's something where when I make mistakes, I just try to iterate on those mistakes, and I try not to keep making the same mistakes. So I just need to make sure that I'm moving in lockstep with my trend model, always following the process, and yeah, just leaving a lot of the guesswork out of it. With that being said, overall things are okay. I have a bunch of long positions on, still long the IWM exposure, still overweight cryptocurrency, which looks very strong. But I'm definitely a perfectionist. When I see a sequence, I'm like, I could have done that a lot better. I'm never really that kind of person to just be like, oh yeah, like let me just pretend like it was perfectly awesome. Like for that, it's like I could have done that, a lot better. So, for me, that's just a learning experience for the next time we get that volatility. Just, be more patient. And it comes back down to this team. So this is a great quote. Look at this. So this is from Mark Minervini. One of the great things about the stock market is that all comers compete in the same ring, skilled and unskilled, professionals and amateurs. This is one of the reasons the market is not purely random. In the stock market, you have the luxury of being able to stay on the sidelines free of charge, observing and waiting for the most opportune moment to wager. You get to see the market's cards before you bet free of charge. This is a wonderful advantage, yet few exploit it. So I think for me, it would have been better to exploit that advantage a little bit more. But yeah, cryptocurrency really moving to the upside. I have some overweight positions here. HUT really moved up the right side of this base very nicely. This is my largest options trade. And my largest positions I have on right now are Ethereum and Bitcoin. And both look like, hey, they're moving to the upside, so not too bad. Crowd, this is another one that had a nice move to the upside. I entered a diagonal call spread on CrowdStrike yesterday. So yeah, that one worked out pretty well also. Let's take a quick look at our options order flow here. Let's take a look. Yeah, let's take a look at our VigTech options races. So we'll look at our combined flows. Check this out. VigTech, they just keep innovating and they're making their platform a lot better. So we got Tesla, SPY, Amazon, Apple, QQQ, EOG, this is an energy name. Then we can see Alibaba on this list as well. Upstart. What? IWM is on the list? Oh, baby. I think it might be time for IWM team. So we're going to leave off on a high note. And I know there I was going through like, oh, what I didn't do so good. It's important to go through that. But once you make the mistake, then you just have to be like, you know what? Next trading day, next move. So let's see. What do we have? Where's the IWM? So we have Q's over here. SE. Yeah, lots of call flow for SE. This is a name that I am long in the long-term portfolio. Yeah, and SE, nice move to the upside today. Alibaba, finally seeing more call flow than put flow. It's another name I'm long in the long-term portfolio. And in my trading account, I'm long the KWEB, Chinese Internet ETF. Man, where are these small caps? Let's see if I can find them here. EOG, Zoom, IWM. Oh my gosh, so everyone's buying puts on this thing. Yeah, they're still going with the puts. Check this out for IWM, team. So I'm going to pull up my trading view. And look at just how tight this thing is getting. Let me pull it up over here. Excuse me. IWM, look at this. It's getting so tight. All these key moving averages are coiled around each other. And oh my god, we had another test to this downward trend line. And we just responded beautifully on it. So this thing is so close to the launching pad. I have exposure for the small caps in January. And this is probably, alongside cryptocurrency, this is definitely like my highest conviction trade here. So yeah, this space, you know, we just keep getting more narrow and more narrow. Eventually we're going to get a break to either side. So now we tested the bottom of this channel. Let's see what happens when we test the top of the channel, team. So that being said, yeah, so just to recap, market definitely resolving to the upside. Even if we look at our dark pool data for today, look at this. Dark pool buyers were just gobbling this dip up. 45.5 reading on the DIX. That is a big signal there, team. I'm actually going to be making a dark pools video for Pristine Capital members. So if you're not a member, feel free, go ahead and sign up, pristinecapital.net. I'll be sharing all that information with you. But yeah, this is definitely a really good signal here. And then, yeah, so we're seeing all that going on in our dark pools. And then we're just seeing, yeah, this nice action over here. So with that being said, trend is looking a lot better today. Violent shakeout. You know, for me, did some things well, did some things not so well. Always room for improvement. With that being said, I will see you all tomorrow.